Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, the 22nd of September, 2021, getting on to 5:25 p.m. Central Time. Okay, so we saw the Fed chair come out. We saw the announcement first from the Fed itself as to the monetary policy statement. Then all the questions and answers, good ones this time, got asked. And here's what we know. Unless we have a disaster of an employment report for September that comes out the first week of October, expect this. Expect that the Fed is going to give the go-ahead to begin the tapering in November. Got it? The tapering will last from that time frame to sometime in mid-2022. They can pull back on it. They can move it faster. It depends on market conditions. The next thing that we should expect is, what does the dot plot show? It shows you more members are leaning to a 2022 rate hike than not. They're starting to come in that way. I'm still of the 2023. And it was pretty much of a given that the market liked the reaction. In other words, the market was pricing in that the Fed would start tapering in November, not scaring the market. It's got to be the most forecast, the most exploited, talked about tapering event of recent times. They're doing it, and that gets it going. Now you got to worry about the yin-yang. What do I mean? Think of the time when this happens. 1 to 1:30 is when all this happens, Central Time in America. What time is it in Asia? They're sleeping. In Europe, they're out for dinners. It's 7 o'clock at night, 7:30 in many spots. So they're gone. We'll get the whole reaction tonight to what they think. We were stable. We didn't pop up. We didn't drop down. That's very important. This is in the market is how I'm looking at it. The next thing, the gold market. You can't go that gold is down $9 tonight. Don't even pay attention to that. It settles at 12:30 p.m. That is before the 1 o'clock FOMC statement and well before the 1:30 press conference. So this is the reaction. This is where it was on the close. These markets all slipped back. Don't be a sucker for what China's trying to do in Evergrande. We don't know what they're doing. The fact that the market was up 12, 13 cents today is just because the stock markets there didn't crash when they reopened after a 2-day holiday. We still have to get through tomorrow and find out how they're working out this debt deal. At least the chairman came out and said that they are talking to the debtors about it. So far, no government bailout for them. But the government, the People's Bank of China, put in, I think it was 90 billion yuan into the market. It's a huge amount of billions of dollars, a big amount. Make the market system safe. We saw EIA and API reports show that we're losing barrels of oil. That's important, and that's keeping these markets well bid. It's hard to believe you're at $76 for all purposes in Brent and holding. Bonds and notes, curve yield's doing this. It's the short end that's coming up a little bit. The 10 years and the others are slipping back as they do that. That's what's going on. Excuse me. So in looking at the market, keep in the back of your mark, this is a close-only chart. So when you look at the highs and lows of the week, no. You're looking at where the market's at right now. The 18-week moving average of closes is in the 43.68 level. You're sitting here at 43.87. That's about 100 points away. I'm not sure it'll get down that far, but we'll see what it does. When we look at the daily bar chart, you had a big outside day up today. I want to stick my neck out a country mile. Until this low is taken out, I think that you've had the event you need to say that this correction phase ended. If today's low is taken out, I want to go back to the drawing table. Is that fair enough? Okay, and I was the guy that was bearish on the way down. I'm also the guy with the swing line that is looking at it and said to you, as we came down here, the 100-day averages holding in the lower Bollinger Band was doing its job. All of that happened so far. Now the key is to get bullish again. You need to get up and over the 18-day moving average of closes. You're nowhere near it. So what I think happened is a bearish event ended that did not start the bullish event formally yet. Is that Clear enough on what I'm saying? Momentum trying to turn up in the process of doing it all. In the NASDAQ, the battle, just like in the S&P, happened at the lower Bollinger Band. Until today's low is taken out, I think that the market has made a statement. Take out today's low, I want to go right back to the drawing board. And don't write me, boy, Ira, were you wrong? That's not what I'm saying. So don't put words in my mouth. So many of you do that. Getting out of shorts, making this statement I'm making is very different than, say, go out and buy. The 100-day average in the Dow is still going to be a resistance point as I read it on the chart, and that's 34,463 roughly. Momentum is oversold. Market trying to get a lift from that band. And in the Russell, same thing. And the Russell, excuse me, had a very good holding of key support level. Coming down, it hit the 100, right here, not the 100, the 200-day average, the lower Bollinger Band, managed to find some support initially there and coming back up. Now, it didn't have the outside days up like we had in the Dow, in the NASDAQ, and in the S&P. Those three have them, so it's easier on those for me to look at that low and not say that they should be taken out. Here, I see a lot of resistance right above the market. Bears are still in control, and working against the market in the short term is it's not oversold. So I'm concerned with it, and we'll see. I think the pros will test the short side of it up at those numbers. In the VIX cash, when the market was right here, I said I thought that the pros were going to sell calls in the market, and has been the case before, you often take heat, sometimes a lot of heat, but at the end of the day, I think we're going back in towards this level, the 18 and the 100-day average of closes. Well, it did the first step. Yesterday it started correcting that step, and here we are coming into the next step that I was looking for. Does that make sense? So now instead of the 100-day average being the support, it's going to be the 200 to the 18 that I see the support coming in. Momentum turning down, trend up, but I think if we're up tonight, this will be under more pressure when it reopens. In the 10-year note, right up to the upper Bollinger Band, I think the longs are coming out of their positions up here. When I look at that's 30-year. Did I say 10? That was the 30, and that's a bond. In the note market, you're just humming back and forth at the 18-day average, not doing very much at all. In the dollar index, you have an outside day up. What's my rule of thumb? You should not take out the low of an outside day up within the next two trading sessions. If you do, you create what I term a bull trap, and it often sets prices down to the closest main moving average. In the case here, it would be the 18. I also am concerned that you're up at an upper Bollinger Band, and each time we've done this market has had failure numbers up there. So let somebody else own it. I'm willing to back away from that. I'm not bearish, but I have lots of reasons not to be a fresh buyer there. Eurocurrency is stumbling real bad. Is it going to embed? Well, you can see, and you can't go by tonight's numbers, but both numbers were under 20, not under 20 the day before. So you're just playing very oversold, got down, and I'll show you today, to the lower band where that flip-flop of the dollar, that should be the support area. We'll see if it gets any in that zone. In the British pound, why is the pound down so much? And it's pretty evident. Boris Johnson comes to the U.S., hoping that he can sweet talk in some way properly President Biden, who should be behind him. They broke out of the Eurozone. They're looking for a long-term deal with the United States on trade, United States on trade, and they're not getting it. He's now talking, it might be another year or two. Why? I don't get all this. What's the politics involved in all that? I mean, we're the weirdest country I've ever seen with what we did to France on the deal of the submarine, and now what we're doing to these people. Yeah, Biden's doing well. In the Bitcoin area, I'm looking at how the market is doing right here. And by the way, if his name was Trump, I'd say, yeah, he's doing well. So don't say Republican, Democrat to me. It's not good what we're doing to our allies. When you look at the market here, getting down to the 100-day average, the lower Bollinger Band, nah, I don't like what I'm seeing right there if I'm bearish. I think that's the zone that people are covering. Is that a buy signal? No. There's a big difference between not wanting to be short anymore and a buy signal. In Brent versus WTI crude, well, it had been correcting and now it's widening back out. And as you could see right here on the Brent, you keep fighting at this upper Bollinger Band. Let the other guy buy the Bollinger Band. It's a sucker move. I want to be the house. I want to own a great casino where people are flocking in. I know that if I don't win tonight, I'm going to win the other 30 nights. Got it? That's how it works. You can get a streak. You can take a house and test their capital for a while as a group, but you're not going to win the game. Well, you're not going to win buying over Bollinger Bands. That's what I believe. It's what I teach, and you go back and prove me wrong. I've looked at it. You get your reactions back. That's not to say a trend changes there. If you're bullish, I think you'll be able to come in better. But you don't have a trend here. You got a lower and low, higher high in a market that might embed. Now, if it embeds, I change my character on you. I am a chameleon. I will become rip-roaring bullish again, and then I'm going to be talking $85. Let's see if it can embed. In the WTI, overbought, came out. That's where I think the pros were taking money off. And then when it lost the embedded reading, I think they took the rest of their money off right here, called it a game. You went to the 18-day average. Now you got to re-embed if you're going to get me excited. You're just overbought into that number. In the heating oil market, okay, are we going to embed here? Nope, not trying to do it there. Let's take a look. Let's go to yesterday. Nope, you're just overbought in the 70. Somebody else can own it. No reason to be short either. And this was the number I was looking for the pullbacks. I am looking for natural gas to rip your head off right here. Back and forth trade. Not go anywhere and ultimately resolve to the upside. So this is what I expected. It's what I'd been talking about with you, and it's finally occurred. Now, let me give you something else that might help you. I've put everything that we have in one area where you can get it. Charting software, ideas on charting, the Chicago Mercantile Exchange courses, pivot points, the Arun indicator videos, all the tools I think that a beginner should be looking at, and way more using the expertise of the exchanges, our expertise in what it is. In addition, when you go to the website to get this free offering, you can sign up for our free research, our other events that we have right there. It's all yours. This is going to be a hot market time to trade. I told you that once the summer ended, it gets exciting, and it's going to get exciting here. So how do you take advantage of it? It's simple. Just go to our website, and on the website, bottom right, free offers. Click on it, take advantage. I'm Ira Epstein. You have a good day.